Markets as well as the public have reacted to S&P's downgrade of South Africa to sub-investment grade, which is essentially junk status. With us in studio today, we have Abdul Davids, Head of Research at Kagiso Asset Management. Welcome, Abdul.
Thank you.
Abdul, what do you make of the downgrade by S&P and the decision by Moody's to not downgrade?
Yeah, first of all, we stayed up quite late on Friday night waiting for the news to come through. I think it does come as a bit of a surprise that Moody's hasn't downgraded. I think we expected an S&P downgrade. Our engagements previously with S&P was that on their scorecard, certainly South Africa met all the requirements for a downgrade. The surprise with Moody's not downgrading is that Moody's has effectively placed us on review. So that means that within the next 90 days, they will review their decision not to downgrade. And effectively, they're saying South Africa should give them compelling reasons why we shouldn't get downgraded. And amongst the things that they're looking for is clearly the outcome of the ANC elective conference. They're looking for signals towards a future path of high economic growth, or even a situation where our fiscal situation in terms of debt to GDP improves as well. Both of those, in terms of the latter two, is unlikely to show a meaningful recovery in the next 90 days. So it boils down to the elective conference in December.
What do you make of the fallen angel scenario that South Africa has now been linked to?
That's an interesting term because it effectively reflects the fact that South Africa over the last couple of years, our economic fundamentals have deteriorated, most notably our debt to GDP ratio. That is now sitting above 53%, as we know. Despite that, we know that South Africa, in terms of our bond yields, for example, has been ticking up. So the fact that a trigger like a Moody's downgrade would mean that South Africa falls out of certain indices, and hence the fallen part of that concept. The angel part is really around the yields that our country is offering. So to give an example, we're sitting at 9 to 10% yields in terms of government bonds. Comparing that to developed markets, where yields are anywhere between 2 and 3%, a 10% yield is looking quite attractive.
That's very attractive to the opportunists.
Exactly, and especially to the foreign investors. Clearly, they will have to stomach volatility in terms of potential a weaker rand, because clearly a weaker rand is detrimental to their investment in foreign currency terms as well.
Abdulaziz, what do you say to the narrative that says that downgrades don't really matter? Downgrades affect the rich and not the ordinary person in the street. Is that true?
Yeah, I get that a lot. And if you speak to your barber or to the guy that washes cars, for example, he will say that all of this means nothing to them, for example. Unfortunately, that's not true. What the implication of a downgrade, especially a Moody's downgrade, will mean is that there would be an almost immediate increase in borrowing costs, effectively the cost of debt. So interest rates is effectively the cost of debt. Higher borrowing costs feeds through the economy. So your mortgage loan, your car loan, your loan from a Capitec, for example, all of that, those will be repriced higher. And unfortunately, the rich, they are rich because they don't have debt. They typically have extra savings. They typically have a lot of the investments are overseas or offshore. With a downgrade, a further downgrade from Moody's, we'll probably see the currency weakening. And that will actually be positive for many of the affluent people or the wealthy. Whereas the man in the street, the guy that has that bond or that car loan, he will probably have to pay high on his loan. So the poor will be disproportionately more negatively affected from a further downgrade than the rich.
Moody's seems to be waiting on what's going to be happening at the ANC elective conference to decide what they're going to do. What do you think, public opinion, what do you think, how big a role does that play? How big a role does the ANC elective conference play in the overall economy of the country?
That's a very good question, because we see it as a binary outcome. If one looks at the economic proposals from both camps, let's call it NDZ, I think the acronym is well known, Nkosazana Dlamini-Zuma. Her campaign is centered around almost a status quo. So what we currently have in terms of the government's sort of outlook in terms of the economy, etc., that would be her plan.
So it's basically what we've been doing up to now to get us into the state.
And unfortunately, that has led us to the path of downgrades. And coupled with that is probably an acceleration of radical economic transformation as well, which by all accounts would be in the short term negative for the economy and negative for economic growth as well. In contrast, I think the Ramaphosa proposal is one of renewal. It's one of potentially a higher trajectory in terms of economic growth. and one that can actually deliver a credible plan in terms of not only reducing our government debt to GDP ratio, but actually uplift our economic growth over the next 2 to 3 years as well. So it is a binary outcome, and unfortunately, from a Moody's point of view, what we're likely to see is that they'll probably use an NDZ win as a reason to downgrade us again.